The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 11th magnificent Monday edition of today's Trader's Edge show. I'm Rhodes TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance life is going to toss at us. Today, you and I, we're going to go take a look and find the gifts of the circumstances of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up the phone, dial on in 877-927-6648, internationally 727-445-1044. Of course, you can email me, steve@tfnn.com, and inside the Tiger's Den, ping away, instant message away, and I'll do what I can to get to whatever it is that you are requesting out there. So let's go ahead and get this magical Monday show kicked off here. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 96 points, trading out of 17,672. S&P's up 9, trading at 2056. NASDAQ Composite up 25 points, trading at 4876. Russell's up 2 points, trading at 1099. You've got gold trading up almost $16 at, we'll call it $12.60. Silver's up 57 pennies. Big move there in silver. That's trading out at $15.95. Light sweet crude up 53 cents, trading at 40 1/4. Lead the charge here to the upside. Individual stock-wise, you got Credit Corp Limited. BAP is a ticker symbol. It's up about $13, 10%. Amazon is up $7, a little over 1%. Priceline up $6, about 0.5%. Google up $6, about 0.75%. Canadian Pacific Railway, that's up about 4% or $5. Leading the charge here to the downside, you got Allergan PLC down $9, about 4%. Regeneron Pharmaceuticals off about 2%. $7 there. AutoZone down $6, less than 1%. Alliance Data Systems down about 3% or $6. And anything else? Fibro Animal Health Corp down 13%. That's off $3. Okay, so what are these markets doing out here? Well, let's go figure out. I think let's take a look at what may be the more important chart here to pay attention to. Of course, they're all important to pay attention to. Otherwise, you might turn off right here at 1:10 in the afternoon and say, I don't need anything else, any other information. And if you do, I mean, have a great afternoon. But let's go take a look at one of the charts that we should be focused on. Now, this here is the chart, top portion of the chart, ES-mini S&P futures contract, 30-minute time frame. Bottom panel of the chart is the light sweet crude contract, 30-minute time frame as well. Now, you're going to see a number of colorful, this is a colorful chart, is it not? You got this is the Picasso chart out here with all of these colors, the Picasso-like colors. If we take a look at this chart, what you're looking at is all those horizontal lines going across my screen. Now, if we pay attention to the bottom panel of the chart, that's light sweet crude, that's the one that we really want to focus on. What we can see here is you'll see some blue horizontal lines, and you'll see one green. You also see a bunch of red ones out there. Now, the green horizontal line happens to be the top of a weekly TAS market profile. So that is resistance. We had talked about this price objective area here probably for weeks. And finally, at about 10 o'clock earlier this morning, we actually saw price get up and test that level. The high during that time frame was 42.03. And the actual market profile number is 42.06. You got 11, 3 cents. So price hit what could be a strong area of resistance. Remember, resistance and support, in theory, and oftentimes in practice, work this way. When you break a level of resistance on the way up, old resistance ought to become new support. Just the opposite on the way down. You break a level of support on the way down, old support ought to become new resistance. So that says, now why are we paying attention to this? Because both you and I know that there still is that directional correlation. It's not a tick for tick. It's not a tick for tat. It is just simply if the market moves higher, if light sweet crude closes higher on today, there's a 75 to 80% chance that the market closes higher as well. Now, when levels of resistance get taken out, should that occur in the case of light sweet crude, that certainly bodes well for at least the markets not moving lower out here. Likewise, this could be a significant level of resistance in light sweet crude. Have we gotten any signals that tell us that that resistance level is not going to be taken out? Well, if you and I use a 30-minute time frame, the answer is no, absolutely not. The 30-minute time frame market profiles out here, those are the red horizontal lines going across our screen. What does that mean? That means that the price level to be watching, there's going to be a couple of them if, in fact, light sweet crude backs down. We'll take a look at the upside and to the downside. In this case here, to the downside, where that resistance of the weekly chart starts to kick in, you would start to see light sweet crude close below its 30-day market profile. That is 2046. No. That would be the ES Mini. That would be a price, my apology, that would be 4120 would be the number that you would be paying attention to. You close below that, then it says price goes and tests at least 4081. At 4081, if in fact light sweet crude gets below there, then you've got your daily market profiles, which were really set up as a bearish kind of leaning box. Just as simple as that. Of course, price getting above that was also short-term bullish. So those are the parameters to be watching today because of that directional correlation with the U.S. stock market. So that's the first thing to focus on and pay attention to. If I come back over here and take a look at my advanced decline oscillators, of course, these basically mean diddly until 4 p.m. today when the market closes out here. But if the market were to close right now at 1:12 in the afternoon, the New York Stock Exchange advanced decline oscillator would be above zero. That becomes short-term bullish. The NASDAQ composite, as we're speaking right now, is still below zero. So that remains in the hands of the sellers out here. And the Dow is also still below zero. So I'll take the New York Stock Exchange, I take it with a little grain of salt until the other two, meaning the NASDAQ composite and the Dow, were able to confirm that out here. So in this case, heading up to that zero line says that you're, in essence, bouncing up against resistance. So we've got resistance in the daily contract for light sweet crude. We've got resistance for the daily advanced decline oscillators inside these three indices out here. The VIX is not providing us with any clue. Well, I can't say it's not providing us with any clues because that would be an inaccurate statement out here. But it's just moving sideways today. So from that perspective, no clue. Trading below its 50-day exponential moving average of 1720. Is it 17? Yeah, 1726. So that's still bullish to sideways just out here. But if you look at that bottom panel out here, you know, that's the one that tells the story. You take a look at the cash VIX index trading out at 1506. You go all the way out to the front month as far as we can go, December's futures contract for the VIX, or you can take a look at November, you can look at October, you can look at September. It doesn't matter. Or you can look at August. They are all, you've got the major contango, and something is going to give out here. What is it that's going to give? I think what's going to give is we're going to go ahead and see the cash index spike. Is it going to spike today? No, not necessarily, but we have at least some initial parameters to be focused on. Now, when we get back from this break, we should at least look at the light sweet crude contract, trading out at $40.41, and say, hey, if it breaks above that resistance level, where does it go next? We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 104, S&P is up 9. Now, when we're taking a look at that correlation between the S&P, the ES Mini, and the light sweet crude, the contract that I had up there was the June contract. We're going to switch over right now and take a look at the May contract, still trading out here. And as we take a look at it, that's trading out at 40.29. And as we take a look at it, this shows us that on that contract on a weekly basis, that price could head up to the 41.31 level out here. And that's where it would run into some resistance. Now, there were some questions to take a look at some other fib levels, I believe it was, inside Light Sweet Crude. Let me see if I can find that. Where is that? Where is that? Bill, there we go. Longer-term fibs. So longer-term fibs. Let me see here. That really what I'm going to have to do, if you want to look at longer term, let's just go take a look at the continuous contract out here. And as we take a look at it, you know, what's really key with regard to light sweet crude is going to be this swing point here from March 22nd. Whichever contract it is you are looking at. Because if price gets above that area, on the continuous contract, you're looking at a price point of 41.90 out there, then that could easily set up a very large A to B equals CD to the upside. You know, and that's really the pattern that is in play as we speak right now. Let me turn off these profiles, though, out here. And for the moment. And if we're going to take a look at any other level of what I'll call Fibonacci resistance or numbers out here, I'd really come and take a look at from about May of 2015, where we saw light sweet crude really trade to the trade sideways out there for looks like a couple of months, and then come all the way down to the low out here. So we can see from that high down to the current price that we're trading at right now, we're at about the 0.382 retracement. So that would then say, hey, look, if you can clear, you being light sweet crude, can clear the swing point, close above that March 22nd high, then you're looking at a move up into the 0.618 retracement level between the 48.63, maybe and or even 54.76 out there, the 0.786. So those would become the targets for light sweet crude. Hope that helps you out. Also had a request to go take a look at Pfizer. PFE is the ticker symbol, and this viewer is looking at Pfizer from a short standpoint. So if we take a look at Pfizer, let's go see what it is that we know out here. PFE, by the way, is the ticker symbol. Now, we can see the completion of an A to B equals CD to the upside, right? So let's take a look at that first. Let's go ahead and draw that on our screen. Your A point was down here on the trading session of February 8th, and that was a low of 28 and a quarter. Your B point was out here, the high of February 26th. That's up at the 30.90. Then you make a retracement down into March 17th. You do about a 0.786, just a little bit more than a 0.786 retracement. What does price do? It gets to the 1-to-1 level, does that on April 5th. Beautiful, no problem. And then on April 6th, you're talking about wide-ranging bar hitting the 1 to 1.618 A to B equals CD to the upside. Now, that alone does not say because you've made a 1 to 1.618 A to B equals CD that's where price is going to stop out here. In fact, you came into that level with a wide-ranging bar. So we know that the next area out here is your 1 to 2 at about the 34.04 level. We also had, and I don't know what was behind the move. I don't know if that was an earnings thing. But on April 5th, Pfizer had one heck of a volume day. 284 million shares traded on that day. What does that say? That says that your breakout area inside of Pfizer, where that was taking out the B point of an A to B equals CD, is somewhere between the top and bottom of that session. That means between the price point of 30.57 and 31.75 out here. That could become some pretty good support. What are the odds that this is actually a reversal signal? So instead of moving higher into that 34.04 level, by the way, let's do this here. Let's take a look at the retracement from its most recent swing point high. That's worth noting. That would be October 28, 2015, down to that A point. We can see that that was a 0.618 retracement level. That was hit almost probably to the tick out here on April the 7th, which was the high of 33.08. And 33.08, how about that, was in fact the 0.618 retracement level. So it's kind of a natural area. Now, yeah, today's Monday. Friday's session was actually a confirmation of a Gartley sell pattern. And today is the additional follow-through that you're looking for. So our viewer out here that's looking for a short, if you're looking for a short and you were looking for the message, you got it on Friday and you have confirmation and follow-through today out here. The problem is you're going against that big, high-volume bar out there. And if we go take a look and put our and also, by the way, and the viewer notedly pointed out, said, hey, looks like this maybe is turning into 3 black crows. Well, that's only potentially true because you only have 2 candle sessions out here. Now, 3 black crows, probably one of the most misused set of candlestick patterns that is out there. And if we take a look at it, back during one of the breaks here, I'll go do some surfing. We'll find some other 3 black crow patterns for you so you can see how they actually work, maybe how they form and so forth. But right here, maybe not this next break, but the one after, just remind me. But if we take a look at this, you actually have to have 3 candle sessions. Now, today is going to qualify if we, in fact, see Pfizer close down towards its session lows. Right now, it's trading at that at 32.08. But then tomorrow, you've got to open up basically inside today's candle or very close to today's candle and then close again at the session lows. Then you'd have it. But the problem that you've got is you also have the reverse of a continuation pattern. Now, we've talked about this occasionally because most of the times that you and I take a look at Japanese candlestick charting, as we understand that most of their signals are reversal signals. They're either reversal, neutral, or they're just out there just for blanks and giggles. You can go ahead and fill in that term out there. However, there are 2 candlestick patterns that are continuation patterns, and one is called the rising 3, and that is what you are dealing with right now, the House of the Rising Sun. Well, what a great tune that is, huh? If we take a look at that, that occurs when you have a wide-ranging candle. In this case here, we're taking a look at a rising 3, so we're not looking at the falling 3 out here. And then you've got, let's say, 3, 4, 5, maybe 6 candles that trade within the body of this candle. So you definitely have a Gartley sell pattern, no question about it. But you've also got the potential, just as we're going to call that this has the potential to be a 3 black crow type candle today, I'd say you have just as much of the odds of saying that this is going to be a rising 3 pattern. How do we know if we have that? Well, the conservative approach would say you get a close above the actual high of that session. That would be the high of April 6th. That's the high of 31.54. The more conservative, and it doesn't really matter in this case here, is just simply a close or a move above the open of that session, or the close of that session, by the way, which was 32.93. There's not enough of a price difference to split hairs on that one. So you've got, from a candlestick standpoint, you've got 2 potential style candles. Now, if we just simply come take a look at volume analysis on Friday, it was 52 million shares to the downside. Remember, that's going going against 150. And today, you've done 28 million shares. You are doing less volume today than you even did on Friday, even nice little bearish engulfing candle. So the last piece of artwork that we can add to this is our TAS market profiles. Let's go see what they say for Pfizer out here. And they say that Pfizer just formed a brand new market profile today. And that's on the daily time frame. It has not even got now the mere fact, quite frankly, that the profile formed underneath price. Paul, there is nothing more bullish when it comes to profiles than as to where they form and where price is at. And when you have price above a level where a profile is at, that is very bullish out here. I can't control what price is going to do, but I can tell you, you don't find it often. It's not very often when you see price either above or below a brand new market profile. Usually it's within the box. And this is saying, be careful on the short side. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Back, folks. Dow's up 81. S&P is up 6 points. If we take a look at, I just put up the S&P 500, and if we go look at the last time the three black crows actually showed up on this chart out here, it's going to take us back to the time frame of September 2014, September 22nd, the following session, the 23rd, and then 24th. Now, remember, inside this candlestick pattern, in order to truly accurately get it correctly, you've got to see the candles, especially on day 2 and 3, closing at or near their session lows. You can see that really occurred here on day 2 and day 3. Now, it is a very bearish pattern, Japanese candlestick pattern out there. Oftentimes, it's too late from a risk-reward standpoint to get you in the trade. You know, that's assuming that you don't know what the right side of the trade is at out here. You can see after those three black crows were formed on that very next day, if you had jumped in at the close of the session, you know, depending where your stop is at, you might have said, oh, that might be a wrong move out here. By the way, here is a little rising, well, I'm not going to go take a look. Let's stay on track right here. Here's another situation, another time where we had three black crows arrive inside the S&P 500. December 11th, 2013. December 10th, 11th, and the 13th out there, right? See how you got those three candle sessions? They're closing at or near their session lows. A very bearish pattern, right? Did it turn out to be bearish out here? No, it didn't. Just take a look at the time before that, the trading session of September 19th, September 18th, September. How about November 19th, November 20th, and November 21st back in 2013? Three black crows. Did that turn out to be a bearish configuration? The answer is no. So, you know, what you really want to do, and the importance of candlestick charting, is you cannot trade just on candlesticks out there. You can if you want. I'll just say that if you do, studies show, if you go take a look at the statistics, for example, if you just sold on every three black crow out there, you'd find out that you're oftentimes doing the right thing at the wrong time. And when you do that in life, you know, we know what happens. You can just end up getting crushed out there. And I don't want you to get crushed. You know, the opposite pattern of three black crows is the three soldiers, right? That's where you've got the price moving up for 3 consecutive days and closing up at the session highs out there. You know, that is the bullish reversal of that candle out there. So what was I saying? Candlesticks are best when they are combined with other patterns. In fact, they have to be. They must be combined with other patterns to give us those signals out there, just like you and I looked at when we were looking at Pfizer and saying, okay, we have contradictory signals out there. So we just continued to add a couple of tools that assist us with what the markets are doing to say, you know, do you take this trade or not? And because none of us, you and I, we don't know what's really going to happen next out there. But what we want is we want the leverage of the probability of what the likelihood of the patterns are that are out there, and we use those technical tools to give us that guidance. So what do we do? And we come back here and we step back and we take a look at what the markets are doing at this stage here. As we speak right now, the Dow up 83, the S&P up 7, the composite up 21. They're testing resistance. They just continue to test and test and test resistance. Doesn't matter if I'm looking at all four equity futures contracts, the ES, the NQ, the YM, the TF, or if I go take a look at the actual cash indices out here. Price is just testing resistance. We don't have any breakouts going on out here at this moment in any of the indices, just testing resistance. That's what the market is supposed to do. The market is nothing but a big, huge ball of feminine energy. What do I mean by that? This is not gender specific. This is just simply feminine energy's role in life, folks. If you haven't figured that out, it's just supposed to test masculine energy. That's right. So when you show up to the game here of trading stocks, you got to come from a level of strength. That's just, again, this is not gender specific out here, but you have to say, what are both sides doing? In this case here, the market right now is just testing levels of resistance out here. If we go take a look at intraday, what are the markets doing? Well, let's go take a look at just something as simple as a 10-minute chart out here that shows the patterns relatively well. If we go take a look at the ES mini as an example out here, and Fibonacci expansions and contractions, they can be used as mathematical measurements of emotion. Right? Emotion out here. And if we take a look at that emotion, sometimes when you get to that 0.618 retracement level, the emotion kind of stops right in its tracks. And if you go from the bottom here, 320 this morning is when the market started to break out to the upside. I believe that's when the DAX and the FTSE were coming online. If we go from that low in the ES mini all the way to the high out here at about 10 o'clock this morning, between 10 and 10:30, we saw the ES mini get up to a price point of 2056. Gets up there, starts to back off. Where does it come down to? The 0.618 retracement. Now, the 0.618 retracement mathematically is figured out at 2041.67. It's not out there inside the ES Mini. So the number would be 2041.75 or 0.50. It's got ticks. And where did we get the low? 2041.75. So it made a real nice 0.618 retracement. Now, what does this mean for you and I? This means that one of at least one potential pattern, that is if the highs of 2050, 650 get taken out, then that could set up an A to B equals CD to the upside. What would that price projection look like? And do we have any confirmation that that's what's going on now? The answer is no. Why? You're looking at a market profile that shows on this most recent bounce out here, right? Price got back into that market profile. As it did that, then what happened out here? Well, we see that this market profile is set up from a bullish standpoint. Price gets right up to where? Resistance, the 2050 level. Does it spike that area? Yeah, it most certainly does. But basically the candle, the body of the candle is the essence of price. We look at the body of the candle. We want to understand those extreme emotions out here. But really it is the bottom of it's the body of the candle that is the confirming message for you and I. If we take a look at the potential A to B equals CD pattern, that's assuming we'll look at both sides of the trade out here. If we take a look at that, that would say that price would move up above about the 2066, 2072-ish type area. That's if 2056 gets taken out. But what's the other pattern that is set up out here at the moment? Well, here's what we can see. Let's go ahead and get rid of that A to B equals CD. And if we take a look at going from this morning's high down to the low where we saw the market bounce, you can see what it's also done now is what? A 0.618 retracement of that level. That came in at 2051. The actual high that came in during that session was 2051 and one tick, 2051.25 out there. So, and you got a bearish reversal signal. So, what does this tell us? This says if we see price get below 2041.75, then you've got an A to B equals CD to the downside. That'll give you a price projection here in the ES Mini that goes like this. Your A point this morning between 10 and 10:30 out that 2056 level. Your B point down here at about 11:40 this morning. Your C point out here at 13:10. Oh, that's a 10-minute chart. So really that high came in between 10 and 10:10. Versus 1030. And that would say that you would then have an A to B equals CD to the downside. That gives you a price projection at 2036, maybe 2032. 2032 would make sense to me because then price would be coming right back to the level where the ES Mini broke out at 320 this morning. You get below that, which you can, you're looking at 2027. So if you're asking me, do I know which way price is going to go right now? I don't. Here's what I do know. What I know at this stage here is the market on the daily basis of charts out here. And we'll just go take a look at the daily equity futures contracts as soon as I put my finger on them. We can see that we're trading with inside market profiles. Our daily profile, or NQ, up in the upper left-hand side, we can see that the market basically has done diddly here since about the March 30th. So we've been going sideways for 3, 6, 7, 8, 9 trading sessions out here. Maybe tomorrow is 10. Maybe the next day is 11 out here. But there's some resistance. Now, there's other resistance than what we're looking at, the 45.25 area out here. If you look inside the Dow futures contract, the Dow futures contract, what it's got is a brand new market profile. And it's not really helpful to us, not a ton of assistance out here. But it does say if the Dow gets down below 17,412, you're looking at 17,071, about 400 points to the downside. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 72, S&P's up 5, NASDAQ is up 18. How about that golf tournament yesterday? No, nothing like the Masters, nothing like a Masters Sunday. I don't know if any of you have ever had the chance to get out to Augusta. I think the best day to actually go days to go are during the practice rounds. That's when everybody is really kind of loose out there, and you can also really get a feel because they'll be on the greens, they'll be putting around, they'll drop the ball in different spots because they know where the flags are going to be, and you really get to see the if you're out of position, just how dastardly the putts are. Just the huge breaks and obviously the speed out there. But I won't say poor Justin Spieth because he simply got to the par 3. What is it? That's hole number 12, isn't it? Where all he had to really do was hit the ball over the water. Of course, you always have to do that when you've got water that's out there. But it wasn't the first shot that was the killer. In life, in trading and investing, there's an expression I like to use, and I think you can apply it to both trading, investing, and life. And that expression goes like this: let your first mistake be your worst mistake. And in the case of Spieth out there, he got so focused. And now I've done it myself. For about 25 plus years, I was a member at a club, and we had our number 13th hole was an island hole, an island green, just like the TPC out there. And you'd be in a tournament, you'd be leading, you'd get to that hole, and your sphincter muscle and everything else could tighten up pretty quickly. I learned that you just absolutely had to focus on what you wanted to do. Do not focus on what you don't want to do, and that's exactly what happens in life out there. So I just the great thing, what I think is a great thing about golf, is that you can apply so much of the psychology of golf to just simply life out here. And that's what you and I do on a daily basis. We just are really here to study the psychology of the market. So let's continue studying the psychology of the markets, but let's do it with Sam in San Jose, California. Sam, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing good. How are you, Steve?
Very good, thanks. And you want to take a look at the euro, is that correct?
No, Yamana Gold, AUY.
AUY. Okay, that's great. Okay. Tell us what you're doing with Yamana Gold and how I can help you.
I had bought Yamana Gold starting around from $2.50, and I added it $3. Now I have already I listen to you every day, and I see that you are
thank you.
A little bearish on gold for some time, and I see some of the gold stocks moving pretty, at a very good rate. So I was just I'm just wondering, as to why are you so bearish on it, and because looking at all the momentum and all, it's with gold right now. So I was just trying to get your opinion about, Yamana Gold, whether I can add to it or what.
Okay, so let's look at. So that's a great question. Thanks for asking, and let's make sure that that at least from my standpoint, and that you're hearing what I say. That when I say that I am bearish on gold, or I'm expecting gold to form a top here, that's different than talking about the gold equities and what they might do on any kind of a pullback. But first, what I really should have said is congratulations on your trade. At Yamana Gold in at $2, then at about $3, it's trading at $3.87, folks out there. I mean, Sam, that is a great trade, and it's a great trade for you not to listen to anyone other than yourself out there. So that's the first and most important thing. If we were just take a look at, and I'll get back to your question with regard to gold, and I'll show you the reasons why that I believe that gold is forming a top more so than it's getting ready to break out. But first, let's focus on Yamana Gold, because that's what you were calling about. Now, the first thing that sticks out to me when I take a look at this chart is the swing point from March the 8th. To me, that's one of the key levels for you to be focused on. And that swing point had volume of 17 million shares. Now, that swing point was taken out on Friday with 20 million shares. That is what we like to refer to in this marketplace of lightning bolt patterns as a confirmed A to B equals CD to the upside. That would then say that your anticipated move inside this equity is to about 478, maybe 532. Now, with regard to adding to positions, there is nothing better. There is no better time to add to positions than when you're already in the money, when you've already made a profit on a trade out there. What we don't necessarily suggest that people do is add to a losing trade, but adding to a winning trade, that is a beautiful thing out here, because then you've got room to play with on your trade. Now, the price projection on that A to B equals CD, Sam, gives you that 478, 532, the $6 range out here. And so those would be the numbers that I would be focused on. When I then look at the further left-hand side of the chart out here, give me one moment. I'm going to turn one of these indicators off. Okay, I don't want. Okay, and I'm going to turn off the A to B equals CD pattern. What then shows up that you should be focused on is where Yamana Gold broke down, where there's this huge level of supply. In other words, you had a number of shares that traded hands on October 30th, 37 plus million shares on that trading day. That means that somebody out there is holding those shares in the $5 range, $4.42 to $4.91 where it opened. And those folks, as this equity got down to a buck out there, boy, it didn't get down to $1, but what, $1.45 or so in that range, those folks were just sweating bullets if they're still holding. So what you should expect is that as that A to B equals CD pattern starts to complete in the 495-ish area, it doesn't mean that you get out, but what you should anticipate is that's where you could really run into some sideways action, or maybe even the beginning of some type of pullback out there. Now, that's Yamana Gold on the daily. I think what you and I should also do is just take a look at the weekly. Now, price is above all daily and weekly market profiles, so those are not going to do you and I any good out there, other than to say if you're looking for a place of support inside of Yamana Gold, right now would have to be at about the 335 level. That is the top of the daily TAS box on any kind of a pullback out here. Okay. With regard to the weekly chart, the swing point, that was from the week that began March 7th, had volume of 75 million shares, and last week you crossed it with light volume. So you've got the confirmation on the daily, but you didn't get the confirmation of a confirmed A to B equals CD to the upside on the weekly. What does that mean? It just, you would have loved to have seen it, both ways. We don't always get what we want when we're looking for signals out here, but you would have preferred to have seen that. Now, that weekly bar where there's some real volume coming into it, we looked at the daily bar out there, or the daily bars. That's the week that began October 27th, and that had volume to the downside of 97 million shares, and the low there is 380. That says you're starting to get into some agitation areas out here. So just with regard to Yamana Gold, does that help you at all?
Yeah, that certainly does. And I was also looking at the charts, and I saw that, what happened last year. So I was a little concerned as to what to do, whether, to add money or to stay with my trade.
So let's go take a look at gold, and let's go see why does Stevie believe that that gold is getting ready for some type of large pullback out here. And we'll start with just certainly you've got gold up $13. It's trading out at $12.57. Sam, could I ask you to stay on through the breakout here?
Sure.
Okay, so we come back with Sam in San Jose, California. We've already taken a look at Yamana Gold. Now we're going to go take a look at the gold contract and get a feel for what it is communicating to you and I. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We've got the Dow up 67 right now. S&P's up 5. We're on the line with Sam in San Jose, California. We're taking a look at gold. We just took a look at Yamana Gold. He's got a great trade on that. And the question was, many of the mining stocks have been performing well. Why is it that I have it's not so much a bearish outlook, Sam, as it is I'm expecting the next large move inside of gold to be to the downside. I think, but sometimes we refer to that as, as bearish or bullish out there. So I get that. So let's take a look at what gold has done what it hasn't done. And since you take a look at chart patterns out there, you've probably noticed that if we take a look at what gold has actually done on a monthly basis, that's the first chart that's on my screen. We know that gold closed out the session the month of February at a price point of $12.35. For 2 months now, well, we have the month of March, and we just have almost 2 weeks here in April. So for 6 weeks, gold has basically not done a whole lot. You're trading at $12.58 right now, about a $22, $23 move as we speak right now. Hasn't really done a whole lot. That's just one element. That's not like the element. That's not like the reason. But sometimes we get so caught up into the daily moves up and down, we sort of lose track of what's really gone on. So if I step back and take a look at a daily chart here for gold, what you and I know is that the market makes tops and bottoms with one pattern consistently. And that's where price moves lower with less relative weakness and price moves higher with less relative strength out there. So if we take a look at the pattern that formed in gold back on December 3rd as it formed a bottom out here, that's one of those patterns. Price was moving lower. You're doing it with less relative weakness out here. Twice it formed a bullish reversal signal, a little piercing candle. Did it first on November 30th, did it again on December 3rd out there. And that set up the low. That set up the low that ran all the way up to the high out here on the trading session of March 11th. Now, on March 11th, 2016, price was moving higher, doing it with less relative strength out there. So the same pattern that formed on a daily basis where nobody wanted to buy gold other than you and myself and some others out here, price here has now moved higher where people wouldn't even think of selling. Now, this is the metal itself, okay? And so until that high gets taken out, the high on that trading session from March the 11th is out at 1289.50. What I know is there is a reversal signal to be paying attention to. Now, up until today, price has found resistance inside of gold ever since that session out here, where we've seen it closing below this little Stevie red line out here. Today's the first day that it's closing above that. And that says me say, okay, that's a potential bullish case that gold will actually go up and test that level. I don't know if it will or it won't, but closing back below 1242 today, you're at 1257, would say it was just it was just an intraday move out here. But that's one pattern to take a look at. There's another pattern out here, and that is the following. I'll put this chart. Are you watching this on TigerTV, Sam?
Yes.
Okay, so this chart here is the one that just confirms my pattern, not my pattern, but the pattern that called the bottom, the pattern that called the top out here. It's this chart right here. And this takes a look at what the commercial traders, the CFTC, traders of gold futures, they release data every Friday afternoon at 3:30. Now that data is released as of the Tuesday's close of information. Now, you can glean a lot of information out there. The best information that I have found that is useful, whether it's trading gold or silver or other things out here, is what are large commercial traders doing. And what large commercial traders are doing right here at the bottom, they are presumed to be the smart money, the big money. They have been continuing to get more net short. They are continuing to build short positions inside gold. That is not usually what bottoms are made out of.
I see.
I'm sorry, we're going to break. Oh, that might even be the end of the show. I'll explain it more on tomorrow's show. My apology for being so long-winded, Sam.
No problem. Thank you so much.
Okay. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.